Yeah, so I'm a buyer of Bitcoin, but again, it's a swing trade for me, looking for a move up here in the short term. But just understand, everyone out there understand that I'm not looking, this isn't a long-term trade. It's looking for a pop in the near term, the next 2 to 3 days, weeks, whatever it may be. And then once we get up, if we get up to about 18.5, I'll pare it back, take some profits, and then potentially just stay on the sidelines until I think.
Welcome back to Let's Talk Crypto. In today's video we have Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com and VerifiedInvestingCrypto.com, discussing the impact of the latest news surrounding DCG, one of the largest venture capital firms in the space, on the price of Bitcoin. Gareth talks about the opportunities he's seeing in the market right now and his outlook for Bitcoin and crypto in 2023. So let's listen to Gareth and pay close attention to his recommendations. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
So this pattern, and you guys can see my chart here, it's basically a large bear flag or in spirit of bear flag. Now, that doesn't mean that it's going to go straight down. In fact, I have a short-term micro breakout here. You can see this downsloping yellow trend line right here. And again, we broke above it. We're holding above it. All we have to do is take out 17,000. And I actually think you're going to get a short-term rally to the upside to about 18,400. So I actually am very short-term bullish, but you can't deny the bigger pattern here, which is still bearish. And therefore, again, I still have it priced in that we're still a few months away from a bottom in Bitcoin, and it probably has a decent amount lower to go. So I think it's the beginning of the end, right? I mean, you have FTX hammering the market, but I think one of the important things to take away from FTX and the collapse is that if you look at the Terra Luna collapse that caused, or that Bitcoin took a hit on, Bitcoin dropped 45%. The FTX collapse, which was much bigger in terms of an earthquake for the crypto sector, you only dropped 25%. So what this is a market that still probably has some flushing out to go, but it is getting close. There's no doubt about it that we're getting close to it. We're also getting closer to potential regulation, which I think will be a huge asset for Bitcoin and cryptocurrencies, at least the Bitcoin and cryptocurrencies that are strong out there, as I do think that that will be an avenue for big money to start to dabble in crypto again. So I'm still looking at potentially 12 to 13,000 is a short-term target. I do believe it'll go lower than that and probably pierce 10,000 and could get as low as 9,000 before this is all over. So again, you know, if you look at it, and there's a couple ways. You could look at it the half full, the glass is half full, which is the negative, which is, oh my goodness, it could still go down 30, 40% more. Or you could look at it half full, which is basically saying Bitcoin's dropped from 69,000 to 16 and change here. Worst case, it's got another 7,000 and change to go. And then we can start to think about really picking some up heavily and looking for some major upside. Yeah, so this type of pattern, and again, you could even make a case that this type of pattern on the chart, this is a cup, and this would be the handle formation. So basically, I am bullish near term. And I know that sounds weird to people when I'm saying, yes, down the line, it's going to go lower. But remember, I'm a trader, right? So I'm looking over the next 1 week or so. And over the next 1 week, I actually expect a move to the upside, as I think, again, momentum will come through. And if you think about it, we heard about Silvergate. We've heard about, you know, the GBTC, and we were going to talk about that in just a little bit. These aren't having a negative impact on Bitcoin right now. And that actually tells me that there's bullish potential price action. When a stock or a crypto doesn't fall on bad news for a sector, oftentimes you're getting ready to make a short-term pop.
Bitcoin price has been very resilient to very bad news coming out of the crypto market. We're talking about DCG, digital currency group that owns Grayscale, which could potentially be worse than FTX. But it doesn't seem like the Bitcoin market cares, or maybe it has already bottomed and it's just getting ready for a rebound. How is Gareth looking at this price movement considering the macro?
Yeah, so I think for me, what's important about how Bitcoin is reacting or not, or lack thereof reacting to the negative news, tells me that the negativity on news-related information is pretty much in Bitcoin's price. And that's really amazing to think about. I mean, it would take a huge epic earthquake bigger than FTX for it to have a big move down. So at this point, that's that bottom is in. What I don't think is in terms of the bottom for Bitcoin is when the stock market begins to really collapse more. And we talked about this in December at the live event. We talked about how I still think that there's another 25% down on the S&P in 2023. And I think that's going to be the kicker of how we get down to the targets that I've mentioned. I don't think it's going to be, another kind of earthquake. We're seeing them, like you said, with Silver and Gemini and Silvergate and all these other things going on. Yeah. That's not having an impact. People are immune to that in a weird way, but it's going to be when people get really scared in asset prices like stocks that they're going to ultimately end up selling crypto and driving it lower. To me, if there's one thing I've learned in trading, there's no easy lunch, right? If this was a no-brainer buy, then every institution out there would be already heavily in this, expecting it to have this beautiful arbitrage trade where it goes back up. And I think investors, if you're going to do this and you're going to buy some GBTC, you have to understand it's trading at a discount for a reason, meaning that there is risk you're taking on that it goes bust, it does something else that you don't expect. So it's not so much to say that don't do it. It's that if you're going to commit capital to this trade, and it's a fair trade, you have to commit the correct amount where if you lose 50 or 100%, you say, okay, I gave it a shot. It didn't work out. I'm okay with that loss. Maybe it turns out to be a beautiful discount. Maybe it survives. But again, go in with your eyes wide open that there's a reason why it's trading down here. And like I always say, even with options, there's a reason why institutions sell 99% of the options to the public, right? It's because it's essentially a rigged game where they're selling it at a premium. Generally, they know they're going to make money on that. If this was an easy trade, if it was a no-brainer for you and me, why aren't they all doing it? And that's the one thing that kind of keeps me on pause.
Bitcoin has been trading in a small range for the last 6 months, so considering all the news and the current macro conditions, what's Gareth's position in the market right now?
Yeah, so I'm a buyer of Bitcoin, but again, it's a swing trade for me, looking for a move up here in the short term. But just understand, everyone out there understand that I'm not looking, this isn't a long-term trade. It's looking for a pop in the near term, the next 2 to 3 days, weeks, whatever it may be. And then once we get up, if we get up to about 18.5, I'll pare it back, take some profits, and then potentially just stay on the sidelines until I think there's a better entry.
Talking about the overall macro conditions, regarding the Fed's minutes and job numbers from last week, the markets actually tanked initially as a reaction to the data. So what happened in the market? Here's what Gareth has to say about it.
Yeah, so you're right. Private sector jobs numbers came out much, much better than expected. We know that the Federal Reserve released their minutes earlier this week and basically said, don't expect any rate cuts in 2023. And the markets didn't like that. The markets, again, this is hawkish talk. This is hawkish economic data on jobs. The key today, and this is why the markets rallied back on the non-farm payrolls number, they basically were thrown a bone in that wage growth has slowed. So again, who would have thought that saying, oh, people are not making as much money or the amount that they're making in percentage terms is coming down a little bit. But that was the first sign that maybe there's some weakening in the labor market, and the market's just ripped higher on that. Now, I will say this, is that ultimately the market is going to like weak data, until we get to a point where we see a recession. And then when the Fed does not come to the rescue, the markets will freak out. And that's my base case for this year. I think by the second to third quarter, we see ourselves in a recession. The market and investors will say, hey, Federal Reserve, we're in a recession. Can you start cutting rates? The Fed is going to say, nope, we can't do it yet because inflation is too high. We don't want to see a repeat of the 1970s where they cut rates too early and then inflation surged back. Yeah, there's no reprieve for at least this year. The only way we get a reprieve is, number one, if inflation miraculously goes back below 2% and then the economy weakens, or if the economy weakens so dramatically that we see like 10% unemployment, then I think the Fed might be forced into stimulating things at that point.
What if they don't raise rates anymore?
Well, you're going to get the short-term relief rally, right? So right now the markets are pricing in at least a 25 basis point rate hike coming up, maybe at least a couple more this year. I don't think there's much to go, maybe a little bit above 5% on the Fed funds rate. But the bottom line is at the point where they say, hey, we are done raising, we're going to go into a pause mode, the markets will see a very short-term pop. But again, it's going to be short term because as economic data starts to get weaker and weaker, and it is, I mean, you can see again, more layoffs every single day. Amazon just announced that they were going to lay off even more people. So it is coming. The wave of a recession is on the horizon, and it is going to smoke the US here. And when we get into that point, the Fed is not going to be cutting rates right away, and the market is going to throw a big fit.
Gareth predicts we'll be in a recession by the second to third quarter of 2023, and the Fed is not likely to lower rates or stimulate the market until inflation gets below 2%, which will cause markets to go even lower. What do you think of Gareth's bearish prediction for 2023, and his Bitcoin price targets of 12 to 13,000? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.